Hey YouTube, this is my first channel video for trading. I've been a member of a couple trading communities on Discord. I have my own private one. Across all of them, I share charts and intraday reactions and things I'm looking at. I've shared this chart setup a handful of times, and I've had enough people ask me for details on what the heck all this is. This is certainly nothing that I've created on my own. It's a conglomerate of information I've scalped from all across YouTube, different websites, personal experience, and I've not seen anybody put all of it together in the way that I'm doing it, but certainly all the pieces separate. I've seen people use them this way. What these are called market internals, market breadth analysis, ratio charts. They have a handful of names. In a nutshell, they give you a keen insight on the New York Stock Exchange total collection of stocks and what they're doing intraday. For myself, I've learned over the years doing day trading that for the best probability of a trade working out, it needs a handful of things. Momentum, volume, definitely need a little bit of volatility, and trend. I've been searching far and wide for different market internals once I discovered what they were, to try to fill in any of my, gaps to what each particular characteristic of the market has in store for the day. Each one of these charts aims to provide that insight for me on what each characteristic of the market is showing, providing some kind of edge for me whenever I think I've identified a trade opportunity. I always take a look at these charts, do my analysis before I execute. And it looks like a lot, but I promise you, once you get started on it and once you see what I show you here today, you'll probably pick it up pretty fast. It's not as complicated as it looks, which I know is cliche. Pretty much everybody says that. I think it's true. So, like I said, 4 characteristics. We'll start with the momentum. So I think momentum probably means a couple different things depending on who you speak with. But for me, I like to know that I've got the wind in my sails. For the markets, that's going to be, what is the overall market doing, right? Is it advancing or is it declining? And that's what this first market internal tells you. It's, you could call it an indicator. It's a free indicator provided by the market itself. And in this case, it's comparing the advancing stocks, the ones that are rising in price, versus the declining stocks, the ones that are declining in price. So this is a ratio chart, and the ticker symbol is ADD. On the trading platform I use, ThinkOrSwim, or TOS by TD Ameritrade, they have all of the internals or special market indicators prefixed with a $sign. So in the case of the ADD or the AD, when the majority of stocks are advancing versus declining, you'll see the candles rising. When they're declining, you'll see them decline. Your key area is the $0 or the zero line. When the candles are hovering around there, you can safely assume that the New York Stock Exchange is in a balance, right? There's not a lot of momentum in either direction. So some may call this chop, consolidation, what have you. It's all relatively the same thing. So some days you will see where we won't have a whole lot of stocks doing much of anything, and we'll have a very tight range. So ranging market, right? If you've been trading, you understand stocks can really only do 3 things. They can go up or go down or go sideways. So given that the New York Stock Exchange is mostly comprised of, I think, about 2,000 stocks, you'll want to have these key levels on this particular chart, the AD chart. 2,000 on the upside, downside. The rest of these are subjective, 1,500 plus or minus. I've seen some folks use 1,000, 500, just how busy you want it to look. And some of the other things I'll show you make these levels a little less applicable, but still overall informative. Okay, so that takes care of momentum. So then the next one is the VOLD, ticker symbol VOLD, again with the dollar sign, at least on TOS. This one works similarly to the ad in that it's showing advancing and declining stocks, but in this case it's reviewing the volume and comparing the two. So the volume of uptrending or advancing stocks versus the volume in the declining or downtrending stocks. So again, the $0 or zero line, that's your neutral zone. When it's wiggling around there, it's not a lot going on typically. I've got a couple of other levels on here, but this number gets so ridiculously large that it really doesn't matter. I'm not even sure why I have this one on here, but I like it, so it's still on there. That one takes care of volume. Okay, so we've got momentum and we've got volume. So that's two of our key components. Let's see here. Okay, so the next one I'll go with is the tick. So this one, you can definitely find some information out there about this one. And I think I've mostly pilfered the levels from websites and other YouTube channels over the years on how to use this one. Dollar sign tick, TICK, like the disgusting insect. If you've been trading for a while, you've probably come along the word tick, but it effectively is an actual term in the market, and it's basically defined as when a stock has executed a higher price than the previous trade. When you see tick rising, it means that across the New York Stock Exchange, all those stocks have had a increase in price for that tick. Similarly, when the candle is downtrending, or it's a down candle, likewise there was a down tick, so price went lower for that tick, right? That transaction. This one is definitely probably the more nuanced one of all the other ones. And I say that because it's really difficult to describe the intricacies in hindsight. There's a lot of behavioral characteristics that only are displayed during real-time intraday trading. You can get somewhat a sense of it by looking at these wicks, but it's not necessarily the same thing. I've seen these candles gap up really high and then close down really low. So, by the time you see it after market close, you won't see that gap because it's already been filled in by this candle body. At that point, the context is lost. So I'll do my best to still provide enough detail so that you understand how to properly use this in your trading. But I'm not going to go into it just exactly yet. Main levels here absolutely have to have these plus or minus 1,000, plus or minus 800, 500, and then the zero line. Given that the amount of stocks that comprise the New York Stock Exchange change over time, you will probably need to review these charts maybe on a quarterly, yearly basis and just ensure that these levels still have the same applicability as that they had whenever you found them useful and for sure applicable to the market movements you were observing. Okay, so that's the tick. The next one I think I'll get to here is the trend. So this one's relatively newer for me, but I found it to be kind of that quote-unquote missing link to my trading. The trend, ticker symbol TRIN, is actually has quite a long history. It's sometimes referred to as the ARMS index or short-term trading index. This was invented back in 1967, and it's basically another ratio chart that is comparing the market supply and demand relationship. The end goal of it is to predict future price movements. Main calculation is advanced stocks divided by declined stocks, and then all of that divided by the advanced volume divided by declining volume. Overall price divided by volume. And it has a couple of key levels on it, and these are an absolute must to chart if you're going to use this. The 0.5 and the 1.5. It's commonly thought when the trend is at 0.5 that it's basically a long area. Similarly, for the 1.5 area, we would expect to see selling anywhere between 1 and I've got 1.1 and 0.9 on here would be neutral territory. So balance, not a lot of movement should be expected. I will say that in my time using this, those areas do exhibit what the general wisdom would have you believe, but it also greatly depends on whether or not we've had a gap up or gap down day. You can see here, like for example, today we had a pretty big gap down, and we gapped down, we were around 0.77. If you look at SPY on a 5-minute chart, it wasn't a buy. So if you bought here, you would have been annihilated. Thankfully, the trend catches up pretty quick, heads into the neutral zone. Let's see here, about 950. And 950, we're still kind of in this consolidation area on the open. But we do quickly leave that neutral zone by about 955, 910, and we are clearly on an uptrend towards the bearish 1.5 level. And you can see, shortly after we broke out of the neutral zone, around 9:55, we started having closes, all the way to 10:20 Eastern time. That's when SPY really started to sell off. Just a heads up, the math behind this can display, I guess, not necessarily false signals, but you might have to let it draw out some of the data for the day before you just jump in on a long just because it's at 0.5 or a short just because it's at 1.5. The other kind of volume that I find to be very important is the volume of the derivatives market or the options market. So they control a lot of the price movement, I believe, with especially SPY, the Qs. And this market internal here, $PCN, basically display a ratio chart, like all the other ones, of the puts versus the calls. This one is inversely correlated, and I haven't really dug into it. I actually would kind of like to have this inverted just for my brain to not have to do the directional inversion. But when it's rising, that means that there are more puts flowing through the market than calls. And so when these candles are rising, I hesitate to call it a price because it's not anything you can trade. So I'm just saying candles. When the candles are rising, that's actually bearish for the overall market. At the open today for SPY, we can see we hit a peak of around 407, we'll say, and let's see here, 407, and that topped out. We had our last up closing candle at 9:55. Meanwhile, the puts are just being loaded up the whole time. The trend is loading up the entire time, screaming bearishness. The tick, so the tick, we have a majority. I'll turn off the wicks for a moment. Majority of the bodies are down at the lower half, right? So when I look at this and the bodies and the closes, even if they're an uptrending tick candle close, if it closed underneath 0, that's still bearish to me. It just means that there was a little bit of cooling off. Anyway, so all those candles up here, right, shows you what the market is doing, the derivatives market. And sure enough, it comes to fruition right around 10 o'clock, and we break relative highs and lows. We break this candle in the day, attempted high price, and we fell down to 405. So pretty good move. Definitely could have made some good profits off of that. That's how you can see the uptrending candles on PCN, puts versus calls, is inversely correlated with the underlying SPY. One of the last internals, I think a lot of people are familiar with this now. I see it all over the place, is the VIX. Now you could use ticker symbol VIX. You can use, VXYM or MY. I don't remember because I don't use it that often. I recently just kind of discovered the /VX, which is the futures. I think it's all relatively the same, so it doesn't necessarily matter, but what's important is you have it up. You understand after watching it for a while what kind of volatility you can expect at the different key levels of the VIX. Whole dollar amounts, I think, are a good starting place. So you toss those in and you can kind of see right here how the volatility reacts, even to the 50 cent marks. Whole numbers, 50 cent numbers, quarter numbers, pretty key levels no matter what chart you're looking at, and a lot of it has to do with psychology as well as software. Like a lot of times software will have whole dollar increments, up or down arrows, or quarters or halves. Whichever VIX quote unquote you want to use, highly recommend you have it up. Got to have the volatility on here. So we've got momentum, we've got volume, got the tick, we've got your overall prediction of direction, and we've got volatility, and we have our derivatives volume as well. So all these together, to me, create a cohesive picture of exactly what to expect from the markets. Doesn't mean you're going to win every trade, but personally, it's guaranteed a lot more profits for me. Certainly not 100%. That being said, the next thing that I would highly recommend is plotting a handful of moving averages on these charts, because while the price levels are important to know for the reasons already mentioned, sometimes when, for example, the ADD, when the ad is kind of chopping sideways, you'll still get a little bit of a forecast if you have some moving averages on these candles. Okay, so I have them on the VOLD. I have them on the ad. I want to say that I add them on the trend also. Let me see. Yeah. Yep, having them on the trend is useful. The VIX, if you need help seeing it, you can turn them on. Provides a little bit of sauce, I suppose. You've got these key levels here, and these never change, so I think a little bit of these moving averages are probably overkill. But I know sometimes they bring comfort to people, so go ahead and plot those on there. I'm using the simple moving average. I don't want to use exponential. I don't want to try to predict anything. I just simple moving average of the closing prices. The pinkish one is 8 periods, and the blue one is 20. So 20 closes, 8 closes on the current time frame. So 5 minutes is what I have most of my internal charts set to, actually all of them. Let's turn Wix back on here. Okay. So let's go through a trade. So sometimes when the day is slow and it's not moving very much, I will flip this to a 2-minute chart if I'm just gonna try to grab like just a micro scalp of some kind. Well, that really messed with my chart there. Okay. And we're just gonna focus in right here on the morning because I actually caught this move today. Okay, and you don't necessarily need to worry about this one. This is a 200 moving average, simple moving average. These two are the exact same as on the other chart. So I'm not going to get into too much on how I established opportunity, downside or upside as far as price levels go. That's outside of the scope of this. I'm just going to focus on the internals charts. All right, so opening today, we had a lot of sideways consolidation. And the first thing I'm taking note of on the tick, and I mentioned this a little bit earlier, is all the bodies. So the bodies are mostly on the low side, but they are still, wicks and all, mostly between plus minus 500. So that, by most users of the tick, is considered consolidation, sideways, choppy. Nothing's happened yet, right? So with these internals, the whole point of them is to help you wait for the right opportunity to present itself, and to not enter on all these different candles and try to figure out which way the market's going and flipping sides every other candle. These will allow you to be patient, and they will allow you to know that you've not missed any moves if you're suffering from FOMO. Okay, so I think it was right around 10 o'clock where we had, around 10, let's see here, 10:15. Yeah, 10:15 we had a wick below negative 800. Okay, so when you see that, that's close to 1,000. I think it actually hit 910. Yeah. So that means a concerted effort of a downward tick transaction occurred, and it was enough of the New York Stock Exchange to make the tick render down here at 910. Okay, so when we see that, we can see right around here we had this movement. This was the last candle we saw above this morning low that was created, okay, around 406. Then at 11:05, the next time we see a wick at extremes, 800 plus or minus, was at 11:05. So 11:05, let's see here. Yeah, 11:05. Yep. Okay, so here's 11:05. So when you see these extremes, you want to pay attention to what the candles are doing. Okay? So that's two of them, and they're roughly around the same price, so that's good. That's important to know. Okay, so next component, we get that wick down here. Let's see. Going to add a price line here, or a timeline rather. Okay. All right, so at 10:10, let's go look at the trend. So right here around 10:10, we see all the moving averages have been broken and clearly trending towards 1.5. We've also cleared this gap that the trend has made, right? So let me maximize this sell here real quick. So important to see that, you know, we've had this gap. Okay. And we've definitely cleared all of that. So that's an important thing outside of the scope of this video, but that's what I was looking at. All the moving averages have been broken, cleared this gap. We're clearly out of trend's neutral zone, and we're definitely nowhere near bullish territory. So we're sticking to short side focused trades. I flipped all the charts to 2-minute here. Okay, so now we're going to go take a look quickly at what the volume and the momentum of the market is, right? So we're going to check the VOLD and the add charts. So you can see here at 10:10, a couple important things have already occurred. So on the VOLD, we already had a break of the zero line. So that's a clear indication that there's more volume in declining stocks. For the add, same thing. There's more decline than advancing stocks. This early in the day, given the nature of the VOLD and the add, they don't have extended hours session data, so these moving averages are a little wonky until they catch up with the price action. So them being underneath doesn't necessarily mean anything to me yet, and the crossover doesn't mean anything either, so safe to ignore for now. This is partly why it's subjective on whether or not you want to have these on or not. You may not need them later in the day. I definitely like them. So, okay, so volume in advance, clear signs, bearishness. Now, given that this is near the zero line, it doesn't necessarily mean that, you've got the whole power of the New York Stock Exchange dumping off and your shorts are going to capture a huge move. All this means is that there's all of a sudden been a sentiment change and you've got some momentum to the downside. By this candle, we had 39. Not a whole lot, but it is an indication. Okay? And I like to look for confluences across a myriad of factors, right? So like I said, the volume, the volatility, the momentum, those are all things that I want to see all coming together to give me more confidence on entering a trade. So next, around 10:10, and let's see here, add another timeline. So around 10:10, same thing on the volatility charts. The VIX is rising off of this 0.5 price level here. So again, like I told you, 0.5, 50% of a range is really important. 0.25, a quarter of a range. So it also happened to cross the moving averages. Now, the moving averages on the VIX are actually usually pretty smooth and not disjointed day over day. So this actually gave me a little bit more alignment and more confidence in the read, but I can read the candlestick's direction just fine. All right, so we've got 1, 2, 3, 4 things, 5 things, all giving us a good sign of bearishness. Yeah. So at this point, I'm definitely thinking shorts are in order. I think I was already actually loaded in prior to this, but that's just because I'm watching the direction of all of this stuff ahead of time, and made a calculated assessment on the VIX and just, economically what kind of market we have. Definitely headed more towards bearishness. We're under the 200, so those are all things I was looking at. The choppy sideways move here did not bother me at all because I'm sitting here and I'm observing the market internals. What's the entire New York Stock Exchange doing? And I can see it in real time, and I have absolutely no doubt in my mind that I can just sit in that trade. There's no problems at all to stay in here. So so by around 10:10, we have all systems go, right? All the signals, and we're good until let's see here, about 10:28 we get a nice strong buy candle that clears out roughly 3-ish down candles. I'm going to take a look at what the internals look like by this candle on SPY. So let's see, 10:28. So 10:28 over here, we can see the VOLD is roughly displaying the exact same thing that SPY is, right? So we've got this down closing candles, and this candle here is clearing out a handful of candles to the left of it. And I don't even really need to do this, but same thing here. Okay. 10:28. Okay. So these candles alone don't tell you much. They're at negative 5 billion, time to get out of your shorts. Not a huge indication of anything in and of itself. So what I do notice, though, when I'm in this trade is that the VIX is starting to show a little bit of exhaustion, right? We've got some doji candles here, and we had a nice big up candle and volatility, and then we didn't quite reach 21. I'm looking at puts versus calls, and we just hit $1, which again, given that this is a ratio chart, $1 is kind of like that sweet spot, right? So you can expect some reactions off of that. And also by 10:28, trend has hit kind of that initial strong bearish signal, and we already had a couple candles that closed over the 1.5 price or 1.5 numerical indicator and started to come back down, right? And we actually are closing under the 8-period simple moving average on this chart. And then also, let's see here, yeah, so 10:28 near the tick on the tick chart, we're also starting to see a nice, really nice fat candle. We're starting to see wicks up at the upper range. So not so much tick here on this one, but all of these other charts gave me enough confidence to just go ahead and close this. It was a nice scalp, and just to wait to see what else would transpire for the rest of the day. There were plenty of other setups throughout the day. I'm not going to go through all of them to create a really long video, but I think this is enough information to get you started in your market internals journey. If you've got more information you want, feel free to leave a comment, and I will do my best to address it in an orderly fashion. But don't expect anything, I guess, too fast. I have a lot going on. I hope you found this information useful. I plan on putting out another video soon on how I find dynamic levels for SPY. You could find these levels on anything that has a liquid options market. So stay tuned for that. Thanks for watching. Again, I hope it was helpful, and good luck with your trading.